Hello, 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 and a massive hello to everybody. How's everybody doing? I hope everybody's having a great weekend. 5th of March, 2017. No trade calls, no recommendations, or response for their own stuff. We're here for educational purposes only, as always. So, what's going on? Potentially a fairly busy week ahead. We've got a lot of stuff out of the commodity currencies. We've got retail sales out of Australia. We've got an RBA rate statement. There's an awful lot of, trade balance out of CAD, an awful lot of data out of China. We have some more data out of UK, et cetera, et cetera. We do have a Super Mario on deck on Thursday, but really it's all about the Fed. I think the bigger things driving here is we're going to be talking about U.S. stocks and the dollar, right? And that basically is going to hinge on what comes out of the States, whatever Trump decides to tweet, how the latest shenanigans over the weekend go, and basically non-farm payrolls on Friday, right? In a nutshell, market's gone from not really sure to completely pricing in a rate hike in March. And basically, we've gone to a situation where there has to be an awfully good excuse not to raise, right? So everybody's going to be focused on that jobs number on Friday. Unless we see a shockingly bad number, I think everybody's going to say, March is done and dusted. So having said that, what are we going to be looking at going into this week? So I think there's a couple of things going on. We feel it's, and again, nobody knows, nobody has a crystal ball, but based on the action, we feel that we've seen some cracks starting to emerge across the board, and we've talked about a lot about different charts. We've posted them on the blog. I'm not going to go through them all. Basically, looking at the YM, looking at the Dow here, we expect that we are in some kind of a topping pattern here. And even if we take out these highs, we expect the market to put in some kind of a top, in this week or in the next 10 days or so, and for us to start to see a nice little healthy retracement here, right? So this is standard deviation channel, 1 standard deviation, 2 standard, 3 standard deviations. We expect it to start to roll from here. I mean, it doesn't have to be a huge move. Just keep in mind that we could see a very, very healthy retracement off those highs back into the, not even into the 2000 mark. That's a 5% correction, and this could still be a massive rip higher, right? So nothing crazy. But another thing to keep in mind is if you see the action we've been getting, and if things start to correct, don't forget, if you look at something like the SPY, right? We got all these, all these small gap ups, right? Low volume rips higher. Do not be surprised if when the buyers start to dry up, you see some sellers coming in, but coupled with the fact that basically there's buyers drying up, don't be surprised if we just fill all these very, very quickly. And don't be fooled into thinking that just because we fill all these small open gaps quickly, it necessarily means anything. It's just going to mean that we're going back to a little bit of a healthy equilibrium point, right? But that's something we're going to be fairly focused on, and we're particularly interested in. And if we translate that into the DXY, so the dollar index, again, not a lot going on. We talked about that short setup in terms of a fib, but I think it's very, very choppy here. Now you've got this 102s, clearly resistance, a lot of chop around here, and you've got this 100 to the downside, right? Here, we just feel there's an awful lot of chop inside this range, and whatever, depending on what comments hit the wires, it could go either way. Clearly, right here, right now, as we said, going into Friday, we expected to see a little bit of profit taking of this move higher into Yellen, so no surprise to see this drift a little bit lower, right? So far, so good. Now, the big question is, if we get a little bit of a follow through here, right, are these two moving averages here going to support and we continue our retracement higher, or is this still part of a sloppy correction lower, right? That's the big question. Nobody has a crystal ball. I think basically the numbers to watch are going to be, the 102, 101s, and the 100, right? Looking at this as major resistance, major support, and the 101 being a bull bear line, and this is going to be choppy inside here. We'll have to wait and see how the market opens, how the market moves. Another thing I wanted to talk about, which I think is interesting, are the ZBs, right? The only thing I wanted to say here on the ZBs is, we were uber bearish on these for the whole of last year, pretty much. And basically, the only thing we're saying here is that we would caution people about getting aggressively short into the hole here, right? Now, it doesn't mean that bonds aren't going to continue to be heavy. We just, again, the way this is trading, right? You've got a lot of chop market, a lot of indecision here, and we'll have to see what happens. Now, clearly, daily, weekly, monthly close outside this range will be key. Right above this area, we would expect to see potential move all the way back into the 163s, and a daily close here, we'd expect to see an aggressive move lower, probably into the 144s. But don't get too confident and don't get too aggressive as long as we're stuck here, right? A lot can happen. This is very, it's not a tight range, and a lot of wheeling and dealing. And unless we get a close outside these areas, this could be very misleading, very choppy, very confusing. Okay, so just wanted to talk about that. And then the last thing, last but not least, is euro, right? We've been discussing euro for a long time, coming into last year, and we said, as far as we're concerned, the healthy move would be to see some kind of correction higher. Now, we've got a lot of event risk with all these elections coming out in Europe, but as the event risks, it looks like maybe Le Pen is going to be doing too good. It looks like in Holland things might be a little bit tamer than expected. A lot of people are going to have to unwind a lot of the shorts, short exposure, shorts hedges on euro. And again, if you see the equities start to roll a little bit, that should add a little bit of fuel to the euro squeeze fire. So be cautious here. It looks like it's trying to base. And if you look at it even on a daily, last week, it was just a clear example of the market unable to get traction to the downside, right? Holding all this area, and as long as this area holds, you'd expect these spike highs, into the 108s to try and get tested. It's similar to the dollar index. You'll have a lot of chop inside this range. We need to break outside, but just be careful. I wouldn't. We're not in a market where you'd expect to be overconfident about any kind of move, right? I think it's a market where you have to stay nimble, and you have to keep an open mind and understand that there's an awful lot of event risk, which unfortunately or fortunately has not even been, it's no longer event risk to a certain point here. It's being translated since November into tweet risk, right? So you get the picture here. So guys, have an awesome one. Have a great rest of the day, wherever you may be, whatever you may be doing. Thank you so much for all the support. Thank you for liking, sharing. I hope everybody's enjoying those live morning calls we're doing on Wednesdays. I'm going to try and keep those up. And again, thank you so much. Have an awesome one. Talk to you guys soon. Take care. Bye-bye.